What's good, traders? Welcome to another video where we'll be looking into why the high time frame is considered to be more much better as compared to the lower time frame. We're talking about the weekly, the daily, and the 4 hours. Myself, this is the time frame that I stick to. I do my analysis from the weekly, daily, and for the entries I get to go for the 4 hours. And remember, we usually do those weekly analysis over the weekend when the market is closed, whereby we get to analyze, we look for potential setups for the coming week, and we usually get to rely on weekly, daily, as well as for the 4 hours. So I wanted to get to have a discussion why this high time frame is considered to have a more winning percentage when it comes to the technical as compared to that lower time frame. There are a couple of things that we'll be looking, but it's very, very important that you get to understand. As a trader, we usually try as much as possible to position ourselves in line with the higher institution. We're talking about the hedge funds, we're also talking about banks, financial institutions. These are the big money makers, and us as the retailers, you can't go against them because they will just squeeze you and liquidate you along the way. So all you just need to do in order for you to make some money from the market is to position yourself with them. So it's very, very important that you get to understand these big financial institutions, they don't trade the lower time frame, and there's a reason for that. First of all, with the lower time frame, there's so much noise going on, so much activity, and there's very, very little clarity on where the market is showing potential of heading to, and this way you might feel more of gambling. Unlike the situation whereby when you get to go to the high time frame, the charts, they are more slow, they are more clear. The price action also is very clear and easy to understand. This way, you are given that is your brain and mindset gets to have that ample time to make some clear decision. Also, if you are trading, if you're a person who has a specific A plus setup that you look for, you don't get to see it every single day or every single minute, and this way it gets to give you the ability to just be patient, be disciplined, and whenever you get to take that one trade, you take a trade which has already checked out on your list. So with a high time frame, I would suggest, guys, especially for the beginners, it really gets to help you the psychology of whereby coming with the expectation of making instant money right away. With a high time frame, it doesn't support that, and of course this way you get to train yourself to be a bit patient, and of course to be more disciplined. So I'll suggest for the lower, for the early or the beginners, try the high time frame, and trust you me, you'll see your winning rate increase in a big way. So when it comes to the high time frame, there are a couple of things that makes it special, and one of the things is the fact that when you get to draw support and resistance at higher time frame, these zones, they are respected more often than never. So for the case of the those people who get to draw zones at 30 minutes time frame, 1 hour, you realize when it comes to high time frame, the market is just chopping across those zones, which the sole purpose of a zone, of course, is to help you to place your TP or your potential take profit. So it's very, very important that you get to understand drawing zones at a high time frame. It's very, very important because it will help you to place your stop loss the right place. So for me, I do draw my support and resistance at daily time frame, and when I'm looking for a set time, because I trade more of a continuation of the trend setups, whereby I do trade breakout and retest. I wait for the daily time frame to break a zone. For instance, if I'm looking for buying opportunity, I wait for the daily candlestick to break above that resistance zone, and now the resistance becomes the support. And this way, I narrow down to 4 hours time frame, which is my entry time frame. For this case, I wait for a breakout and retest. The 4 hours has to break and retest, and I wait for a 4 hour candlestick, an engulfing one. For the case of the buys, I wait for a bullish engulfing candle to form and close before taking any trade. This way, it gets to give me room to place my stop loss that is below the previous lower low. That is the lower low of that 4 hours time frame, and should also be approximately below the daily zone. That is the daily now, the resistance now, the support zone. This way, I feel more confident, and of course, the market really gets to break that zone. And of course, unless I'm totally wrong, in case the market goes against me, I know for sure it's not me, but the market had maybe a fake up, a fake out at higher time frame, and this way it gets to really gets to help me to eradicate those reckless mistakes like positioning your stop loss the wrong place or even being wicked out. This has really increased my win rate by just adjusting just few things. This has really boosted my win rate, and I will say for sure what has really changed on my side is that those reckless losses that I used to take sometimes back, they are now off my books, and this way my win rate stands to show some progress that is more of some growth, and this way gets to boost that is my edge as well as my personal confidence whenever I'm taking these trades. I know for sure if I get to position myself at this particular place, I'm more patient. I can even now even take a trade and go to sleep peacefully. Before, trust you me, I used to almost sleep while I'm watching the charts, uh, looking at every tickle of the market to see whether the market is going to my direction. And that's not the healthy and the professional way to trade. You need to have those trades without having any emotions. Also, another thing with the high time frame is that the high time frame shows good market structure. Remember, in any trade or any trade out there, if you don't understand the market structure, this is the foundation of becoming a profitable trader. And market structure basically means what is the market showing you in terms of is the market an uptrend or is the market in a downtrend, and we get to look at this as per how the market is forming. That is, for instance, if the market is in an uptrend, we get to look at is the market forming new high highs, new higher lows, or is the market in a downtrend whereby it's forming new lower lows and new lower highs. So it's very important that you get to understand that the market structure. And for this case, the market structure at higher time frame always win because, as I said, in lower time frame, the market seems to be having a lot going on, and it's very hard for you to see whether the market is even in a trending and what the higher time frame trend because the higher time frame trend that is tends to be more respected unlike the lower time frame. So it's very important that you get to pay attention to that. So also another important thing is to realize that with the high time frame, this is where the real trend is observed. For my case, when I'm doing those weekly analysis, I get to look at the weekly trend, then narrow down to daily, and now from there now I can get to position myself. For instance, if I'm looking for buys, I get to look at the previous high, which is the recent that is high low, and where is the market bouncing from and where should I position myself to take a trade. So basically with the high time frame, I will suggest guys it gets to win every single day, and I would advocate if you are a new trader out there, try focusing on the weekly, daily, and for the entry is 4 hours. I won't lie for you. The process is a bit slower as compared to lower time frame, whereby you're always are feeling the dopamine because you're always involved with the trades. But for the higher time frame, you are less calm. You see things more clearly, and of course, when you get to take that trade, sure enough, there's a high probability of it heading to a direction. That's it for today, guys, and I look forward to seeing you in the next one. Talk to me in the comment section, and don't forget to hit the subscribe button. Peace, guys.